The Fed meeting kicks off today, kind of a big week when we look at CPI and the Fed decision. But I want to focus on today first. What's your WEX word of the day? How do you see today shaping up?
Well, the WEX word of the day is visibility, because that's what's getting investors anxious about the next couple of days until we hear from the Fed and CPI. I think investors are anxious and they want visibility.
All right, so looking for some visibility. We got some visibility yesterday from Apple. We've been waiting for WWDC and their big artificial intelligence unveil. Stock closed down 2%. I want to get your take on what you heard and what you saw and what you think about the stock.
Well, Apple is one of our granny shots. It's a stock that we think investors need to really hold for the long term. The company has always been at the center of everything that's happening around a consumer and new technologies. So to me, there might have been some head scratching because these features may not be part of someone's life just yet. But as you know, Apple gets a lot of these things right.
All right. So by the way, for the audience, your granny shot, it's kind of like almost a very easy shot. You think it's almost a no-brainer when it comes to that stock, right?
That's right. I think investors should look at it as a core portfolio holding. The granny shots is basically a thematic portfolio that buys the strongest stocks in a specific theme. So when you think of AI and millennials, Apple and NVIDIA and Tesla, I mean, they're really at the center of that.
All right. But your sector picks when it comes to the AI trade are NVIDIA, Cadence, ARM, AMD. Why isn't Apple in there if you believe that it's a core holding and obviously they're pushing into the AI space?
Well, mainly because Apple is much more than just an AI company. So I don't think it's intentional that we left out Apple when we talk about AI trades. But when our clients are looking for direct beta exposure, to them, the complex is NVIDIA, and then stocks with high correlations to NVIDIA, which are the ones that we actually listed.
All right. So, Tom, know what you're intentional about? Small caps. You've been one of the biggest bulls when it comes to small caps, specifically the IWM ETF. I'm just looking at the small caps since the last Fed decision. They're up 3%. The rest of the market's up about 6.5%. They've been lagging all year long. Is there still a case for small caps to rally as much as 50% this year in your mind?
Oh, yeah, definitely. I mean, one thing investors have to keep in mind is small caps get hampered when investors worry about lack of visibility. When the Fed begins to cut, and we actually have shown this to our clients, and the number of expected cuts begins to creep up, that has been correlated with the IWM outperforming the broader market. So the reality is the stock market is saying, look, I don't want to touch small caps until the Fed starts cutting. But in the meantime, small caps have better earnings growth, close to 19% in the Russell 2000 versus around 9% for the S&P. And the median PE multiple is actually around 10 times in the Russell 2000 compared to 16 times for the S&P. So better growth, lower multiples. I think it's a great risk reward for investors right now.
But aren't they also more rate sensitive and also more sensitive to the higher cost of capital and the higher for longer environment? I mean, you keep saying that investors don't want to touch them until the Fed starts cutting. We don't have any clarity. We might get some answers tomorrow, but it's unlikely. The Fed's been very clear. They're data dependent.
Sure. But I think what you've just described, which is higher cost of money or, a high bar for borrowing money, I mean, that's the existing conditions. So when the Fed starts cutting, that starts to ease. What would investors benefit from is having exposure to things that are levered to an easing of financial conditions. That would actually argue for small caps. So it's a bit of a waiting game, but boy, I mean, I don't know anyone who's made money trying to trade this week to week. Any great ideas, all the great ideas take time to work.
I mean, wow, fair enough there. Is there any part of the small caps that you think are better than others? I mean, all small caps aren't created equal.
Well, one thing I think investors have to keep in mind is that they might think a small cap is like a weak company, but actually small caps, especially in the Russell 2000, tend to be very strong companies that dominate a smaller market. So that's why, they're not $1 trillion company, but they might be number one.
All right, guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today, we're briefly going to be looking at NVIDIA, Tesla, AMD, and Apple. So we'll start with NVIDIA. You can see they've kind of got a wick right here that's not actually part of the chart, so I've got it zoomed out. We'll ignore it. Today we're down about 0.6%. We're having an inside day. You can argue this is kind of a triangle, and we're going to blast off higher. If we can't hold this move and start dropping below her, the first support looks like about 116, And if we can't hold that, we'll be back at 110. If we can hold this move and keep going higher, obviously we'll break out of 125, then to 130, and so on, guys. We held this 45-day back here, bounced off of it greatly. The 200-day is still catching up. The 10-for-1 stock split just went into effect, guys, so there's still a lot of hype to be had, still a lot of momentum to play out. Still looking bullish until it gives you a reason to get out. Tesla, on the other hand, is looking like it's breaking this downtrend line. It's been respecting it for weeks and weeks and weeks now. Hopefully this is just a fake out, shake out, and the next day we come right back above it. If we do start breaking down, first support we have is about 161. If we can't hold that, guys, we might go back to 140. If we do just kind of get a fake out, shake out, we should be back to the 180s and blasting off towards 190, 200. So it really depends on what this next move is going to be. AMD, also looking like it's kind of in the middle of a range. We just breaking the low here. Could be a fake out, shake out. If it's wanting to go higher, we've already put in the lower low, so we should go higher from here, back towards 165, 170. And the real test will be 175. If we can break out of that, we'll be looking very bullish. If we do continue to break down, guys, the next support's about 150.50. And then after that, you can come all the way back down to 141. Depends on these next few days, but as of right now, it is rejecting the 45-day moving average, headed back towards the 200-day moving average. So just something to keep an eye on. And then Apple, with the huge WWDC 24 yesterday, look at it, having a 5% plus day now. Yesterday when the news came out, it dropped Apple almost 2%. I guess everybody didn't really understand the news, or it took them a little while to understand it. But boy, this morning is it shooting towards the sky. We're breaking out of 200. This is a blow off top. This is a breakout, guys. We are no longer getting rejected like these times here. So this is extremely bullish. Let's go to just a bigger time frame. Every single bar is a week, and you can see this huge double bottom, and now we're having a breakout top. This move is just getting started, guys. Looking extremely bullish. I hope you enjoyed the video and the breakdown. If you did, please hit that like button and subscribe. Maybe check out some of my other videos, and I will catch you in the next one. Peace.